Sticking with the B20 summit, Absa CEO Kenny Fihla joined me for a look into moving barriers to intra-Africa trade. He kicked that conversation by unpacking what governments can prioritize to improve the operational environment for businesses.
I think there isn't a shortage of things that need to be done. What is a bit slow is the execution at the back of suggestions, recommendations and reports that have been published in a whole range of forums, including the G and B20. And I think at this critical moment, given some of the geopolitical challenges, the one critical issue is the harmonization of global rules so that ultimately we can give credibility back to global multilateral institutions. For Africa in particular, I think we need to focus on removing barriers to intra-Africa trade. The sooner we can get that done, I think the better the chance of Africa reclaiming its rightful place, ensuring that it can leverage its population and put itself seriously on a global platform.
And I was just talking to His Excellency Wamkele Mene around this newfound opportunity, right, where we have the current circumstances at play, AGOA coming to an end, these tariffs from the US at play, and we're seeing a lot of African countries diversifying in terms of markets, looking at Africa more closely. Are we moving fast enough? Are we?
Not at all, not at all. I think we are making progress, but I think we can benefit from a faster movement, especially when it comes to ensuring that we remove as many barriers as possible. As we speak today, it is still extremely difficult for organizations that operate across multiple countries in Africa to move capital around, to extract their dividends, to move their skilled labor around and so on. Those barriers still exist. They are substantially less than they were, say, about 15 years ago. But I think those are sorts of things that are within the control of Africa. I think the more we can deal with issues that we can control, the faster the pace of implementation is going to be.
And something we can't necessarily control is that risk perception around Africa and getting, more affordable capital into the continent. What are your thoughts around that and what can be done when it comes, to accessing capital, especially because it also trickles down to commercial banks and then goes down to SMEs?
The risk premium is huge. It does not only affect countries or governments, it affects corporates and banks, and that cost gets passed ultimately to the end consumer. So it is a costly exercise for the African continent to be bearing this load of a risk premium that is driven by perception and not by economic fundamentals. That does not mean that all of our economies and countries are working well. It does not mean that all of them have the right institutional framework, the legal system is tight, and the policy are predicted and the regulations are clear. Of course, there are countries that are more risky than others. Unfortunately, the generalization of Africa and the allocation of an additional risk premium across the board is destructive, reflects lack of appreciation of the differences and the nuances. And I think we need to speak up as Africans and urge the rating agencies to really understand the continents and attach risk based on the circumstances and the facts that pertain to that country and to a specific entity.
Kenny, does the creation of an African ratings agency solve that issue? I mean, there's been, works and talks about this.
I think it might, but at the end of the day, a rating is important for people who want to put capital into your institution. And if those people do not have confidence in the institution that provided the rating in the first instance, it's unlikely that they will use that rating. They will still rely on the rating that comes from agencies that they've got confidence in. So we need to reform the global financial system and the global rating systems. Having another one would be useful for Africa, but I do not think it will solve the problem, because ultimately it is the choice of the investor and the allocator of capital as to which institution they want to use. I think the more rating agencies are there, the better, but ultimately the entire system ought to change and rate Africa appropriately relative to the risk that it presents.
And just sticking on the conversation around capital and accessing capital, particularly for SMEs, right? Finance Minister Ino Korongwana recently just got behind the SOB in support of lowering the inflation target, which is now at 3%. We always talk about short-term pain for long-term gains when it comes to this inflation target.
Absolutely.
Are you not necessarily worried, concerned about the restrictive environment and the kind of impact that could have on SMEs that are already struggling to access that capital?
I think the barriers to capital that are faced by SMEs go beyond just where the inflation is being targeted and consequently where interest rates are. Of course, that provides an additional barrier, but in reality, we need to simplify regulations.
Okay.
We also need to take costs out of the entire process, i.e., banks have a very, very large infrastructure. That infrastructure was built decades ago, serving a particular market that was behaving in a particular manner. The sooner we can modernize our own institutions and take cost out of the process, we'll be removing some of the layers of cost that ultimately get passed on to customers and SMEs in particular. I think we also need to improve the understanding of SMEs so that when we do our own credit assessment of requests that we get from our companies, we overlay factors that are relevant to that sector. Banks at the moment use the same methodology. Whether you are a large corporate, you are an individual, or you are an SMEs. I think for small businesses, understanding who the owner is, how they behave, what's their credibility within the community is far more important than historical financials. Because in the majority of cases, those do not exist.
Is this where the fintech players come in?
Absolutely.
Right?
I think through fintech, we can leverage data that traditionally banks do not have. We can look at other information sources and be able to take those into account and use them to inform our own lending decision and how we price the risk as we lend to SMEs. This is an evolution that must happen, and it must happen quick enough.
Yes.
But it also requires regulations to be supportive of that environment. The current rules around the capital that banks hold do not distinguish whether you're an SME or you're a big corporate. In fact, these rules become even more punitive the smaller you are, the more fragile your entity is, and so on. So I think we need to rethink about the entire system that makes it possible for banks to provide capital to small businesses and make sure that we change those elements of the ecosystem that add costs, that makes it difficult for banks to lend, and ultimately that makes it difficult for people to start their businesses and grow.
That was Kenny Fihla, CEO of Absa.